Welcome to A Canadian Investing in the U.S., a podcast and YouTube channel focused on Canadians buying real estate with host Glen Sutherland.
Welcome to a new episode of A Canadian Investing in the U.S. with Glen Sutherland. This week, my guest is Patrick Grimes. Patrick, do you want to start off by introducing yourself to the audience?
Sure. Nice to meet you, Glenn. I'm glad to be here and excited to have our chat today.
Glad to have you.
It's Patrick Grimes. I'm the founder of Passive Investing Mastery. And I was, like many of your listeners, just out there working my way through corporate America, slaving away at the job, and found my way into alternative investment strategies. And that's kind of where we're at today, is educating people on how to invest in alts and actually sponsoring different alternative investments ourselves.
Yeah. So even as you're saying that, it kind of sparks interest in me. I know we were briefly talking before this, and you're talking about your side project or your side hustle, that how to convert it into, what you do for a living, or how to even, pay for your retirement or other things. Maybe would you be able to walk me through a little bit of your story to try to, piece that together, how someone would do something like that? Maybe if we can find some takeaways for people that are listening.
Sure. So when I was graduated college, did machine design, automation, and robotics. I'm a mechanical engineer. I won a design competition in college, and so that launched me into mechatronics and automation. The first design firm that I worked for, machine design firm, I was doing well. I had some money to invest. I asked the owner of this company. I think he had 35 years. He is the co-founder of this thing, a titan in the high tech space, and I had looked up to him a lot. And he said, "Look, you're going to do well, but make all your money in high tech and dump it into alternatives, dump it into real estate, put it somewhere else, because you're on a wild ride." And although I hadn't experienced it yet, and I soon would be, he said that in order to get the financial security you want for yourself and your family, you're going to need to learn how to invest outside of the stock market, especially outside of high tech. And so that launched me into real estate for the very first time.
Well, that's wild, even hearing that from a boss, right? Usually not giving you that kind of advice. So that sounds like you got some pretty good advice. So talk about how that started. You said you went into real estate from there. What does that look like for the first project?
I never thought I would become a full-time real estate or even I'm not just real estate now. We do all kinds of things now, but really it was about diversifying was the conversation. But
yeah.
I never thought I was going to leave engineering. I love engineering to this very day. I've been a geek since I was a little kid, building Legos, alarm systems for my room, taking apart VCRs, doing all kinds of stuff.
Yeah.
But my intention was to just be smart about where I invest, and I didn't live a frivolous life. I didn't come from money, and so I knew how to live on a shoestring. And then I took the extras and I started learning where to put it. And of course, right out of college, I thought I ruled the world, and I thought I could just double and triple my money every year. So unfortunately, I invested into a pre-development, which was, as very speculative in nature.
Yeah.
And unfortunately, that was right before the subprime mortgage collapse. So my very first deal, I was personally guaranteed on some land, and it went upside down, and the developer went bankrupt. And so I was holding the bag, and that was, went through foreclosure, didn't go through BK, but I learned a lot about resilience. I learned a lot about market cycles. I learned a lot about not getting over allocated into a specific investment. And I learned a lot about how to buy assets that are cash flowing and stabilized and stuff. So that was pretty rough. I mean, I was still a talented engineer, and subsequent got a master's in engineering and an MBA, and landed some higher end jobs in this space. Which allowed me to get back into it in different ways. But, it was a very trying time, but it was, they say fail soon, fail early. So I succeeded with that.
So just with that, I think a lot of people hearing that would just stop real estate at that point. What made you decide to continue doing it? A lot of people go, "Hey, you know what? This doesn't work." What made you, you talked about, hey, we wanted to start having cash flow and, properties or other different types of assets that you're doing. But something had to change there because you're doing the speculative stuff and you're in buying land. So what changed in that period to or did you stop for a while? Like how did that story go?
Are you looking to invest in the US? Are you looking for a coaching program that will actually save you money and help you avoid mistakes? My students get discounts on lawyers, attorneys. If you're looking to get an E2 visa, if you're looking for certain software, if you're looking to even speak with CPAs, I have discounts for all these things. If you want to just get on a quick phone call and we can discuss if it's a fit for you, 10-minute phone call, go to glensutherland.com or at canadianinvestingintheusa.com and book a call.
It took me years to recover financially, to recover my ego, to recover. And then I started researching, pulling the breadcrumbs of the wealthy, once I got done with my master's programs and I took a director position at a smaller firm, and I was getting pretty large bonuses. Yeah. And I was like, well, where did the wealthy invest? Where do they go? Where are they doing it differently? Why is it that most millionaires were created in real estate? And so I did look a lot of different asset classes. And right now we educate on like 50 different kinds of alternative investments in our platform. But what I was brought back to was buying existing properties that are cash flowing, can cash flow. And so I was buying and renovating and refining and repeating. It was the Burr method before I knew what that was. And I learned about recession-resilient markets, ones that have diversified employment in certain subsectors that ride out recessions well. And I learned about those recession-resilient industries. So I started actually from California. I started investing in Houston, which, subprime mortgage collapse kind of tapered off and then went up again. So it actually was really stable. So it was working. I mean, I was moonlighting real estate and I was building this portfolio, but it was brutal. I was succeeding, but at a big cost. I was using basically virtually all my time, more time than I wanted. When I wasn't pursuing this job, right, my job, I was pursuing this hobby, this thing at night. And so that became quite taxing. And then when I finally met my soon-to-be wife, I realized I needed to take a break or I was never going to end up being able to marry her. So I took a 2.5-year break at that time. And then that's when I realized, like, I can't do I can't do this DIY stuff, right? I got to learn to partner. I've got to learn to scale this without it just consuming me.
That makes a lot of sense too, right? I hear that a lot from a lot of people who are successful in their job, as you would say. And it just, otherwise you're, it's hard to juggle both at the same time sometimes, right? Depending what you're trying to do. One thing you said a few times in there was like recession resistant industries, and you're talking about like you work in other things besides real estate. What are some of the other things that you invest in?
Yeah, well, there's a combination, kind of like that recession resilience and non-correlation, and like that Venn diagram, that overlap is where the sweet spot is. So recession resilience just means like it doesn't have a ton of exposure from broader markets, right? Where you look at industries like healthcare or education or the legal industry. We have a legal fund where you can invest in something that's needed. People need healthcare. They need care, whether it's a good market or a bad market. They need skilling and upskilling, whether it's a good market or bad market. And when times are great, lawyers are doing really well. When times are bad and people get litigious, lawyers are doing really well. So it's there are industries where they're just up and to the right, and you don't see a ton of volatility. And so those are kind of that recession resilient. And then there's the other side, which is non-correlation, which means you're not only in recession resilient markets. Maybe you're in ones that ride different ways, because the majority of investments out there, they rise and fall on different cycles, like the stock market versus real estate versus oil and gas, right? And so there's a lot of investments that ride different waves. And so you want to make sure that when you're constructing your investment portfolio, kind of have these pillars, some in some more tried and true, kind of maybe legal firm, healthcare, and some in markets that provide different waves of returns. You're not all in, and we don't lose it all like I did before, but maybe have allocations in stock market, allocations in real estate, allocations in energy, and other, and there's other ones like CPA firms and HVAC and plumbing. These other services that are obviously needed even in downturns. And some of these lesser known alternatives, like the ones we educate on, timberland investing, things like that, which are really known better by hedge funds, more sophisticated outfits, institutions that know how to construct portfolios that last. That's where I think the education of the American population is at such a disadvantage.
Yeah. Yeah. And so when you're talking about investing in those, you just said it right at the end. Like you're talking about investing in hedge funds or REITs or something that owns like the whole thing for you. And so you're just coming in as a passive partner in there. You're not going to be like the kind of person I'm like, I'm going to go buy an HVAC business or an electrician's business and run the business. Am I right there?
You certainly can, but I think the DIY trap that I talked about before, because there's a guru trying to teach somebody how to do everything. And I'm not saying go invest in a hedge fund. I'm not saying go invest because, a lot of those, especially the publicly traded ones, they're sentiment driven. And then you just end up right back correlated to the market. But I mean, in our platform, we promote more direct investments, and we've had over 50 different alternative investing mastery series sessions where we bring on 2 or 3 panelists that have been working in different industries and offering direct investments in different industries, such as those, all the ones we've listed so far, actually. That allows you to access them without investing into something that's publicly traded, right? And still back to that, because REITs they're paper, they're not real estate, right? And so it's the same example as you want to stay away from those stocks because that's a separate allocation. You have an allocation there already. That makes sense?
Yeah, that makes sense. So, now you're mixing in like real estate into these as well, right? So you have a balance of some different things with different levels of risk. And I probably have to make this a more specific question, but like in your portfolio, what percentage do you kind of put in different categories?
Are you looking to buy property in the United States, but not interested to travel there just to sign the notary? Did you know there are 6 different ways to sign notary as a Canadian, and only 2 of them involve going to the United States? To get my free guide on notary, go to CanadianInvestingInTheUSA.com/notary.
Yeah, it's always a challenge for somebody like me. And I think with everybody, you get into something new, you get really good at it and excited about it. We're way over indexed in that thing, and then you try and get into something new. So if you look at our slide decks, we actually put the allocations like from Edward Wolf or Tiger 21. It shows the allocations of the middle class, the high income, and then the ultra wealthy, and where they're typically at. And it's true that the stocks and bonds have the highest percentage, right? But next up, the majority is real estate, about 25%. Is it 24, 27, depending on what you're looking at. The middle class might be a little less, might be like 15. But if you want to invest like that kind of next step up, right? You invest like the people that are doing a little bit better and you want to work on those allocations. The question is really, okay, there's 25% real estate, there's like 40% stocks and bonds with some other cash equivalents and commodities. But then where's that other like 25%? Where's that other, so like 20 to 30% in private equity, business interests, ownership, or private placements, these alts, these alternatives. And you certainly don't want to do that sliver of your pie into something that is real estate that'll grow and fall with real estate, just like I did, or something that's back in the stock market, because that sentiment driven piece is going to ride a wave. So how do you allocate into these? And that's why we offer things like private credit funds. We offer things at our company like legal funds, because it allows you to put a sliver of your pie into something that says, look, I've got something there. When those returns come back, it's going to have nothing to do with the underlying fundamentals. The market fundamentals that drive these returns have completely a non-correlation, de-link, have nothing to do with any other investments I have. And that's when you start to build true fortification, true pillars into your wealth strategy.
Mm-hmm. And like, because you're an educator, like those are kind of numbers that like, they sounded like sort of benchmarks or, I guess averages for like someone who's middle class or upper class or lower class. But for you personally, how do you follow those same rules? Because I know, you say like, hey, it should be like 25% or whatever the numbers are. But is that the same? Like, do you like go with the exact same numbers as that? Or, like you said, you get excited about, a certain project or a certain, kind of company, and you do the same thing a bunch of times. So things get out of whack one way or another. What does yours look like now? And is there something that you're like excited about the most right now?
Yeah. So right now, I mean, you've got to look at, we're at a very precarious time, right? So I follow not necessarily the big trends, and those numbers that I gave you are spanning ages as well. And as people get older, they become a little less aggressive and they're younger. Some people go for more cash flow, cash equivalents when they get older. Some people are in high growth because they have high income. So all of that changes with age. Right. So you talk about with me, we'd have to say, like, we'd have to adjust those numbers to be like what I am. But where I'm at right now, and everybody's different, right? Everybody has kind of their different approach. And I've had over 1,000 investor calls and everyone's a little bit unique. There's some patterns, right? Yeah. But with me, I'm not very positive right now on where the market's going. You look at the black swan event of COVID, right? The skyrocketing interest rates, but that was just the beginning. We have the inflation that ensued with high payroll and materials. That's destabilized some specific, the markets, as well as some specific types of real estate investments, right? We've seen some big challenges. So I'm not as favorable as I was in some kinds of real estate. I'm certainly not as favorable in the stock market, because not only that, now if that wasn't enough to cause a crash, which it has before, those types of factors, we have more. We have 2 proxy wars, right? And then we bombed Iran in addition to that. And then just in BRICS, the world's biggest economies betting against the dollar. And then just in, we have this big spending package, which means you're going to continue to spend, spiral out of control. And all of these things individually could cause stability in the markets. That would be the sentiment-driven stock markets. But the combination of them puts me in a little bit of a position where, look, I want to allocate far more away from the stock market. So I'm actually less than 10% right now exposure to the sentiment-driven market. And the majority of all of my assets are sitting in a combination of precious metals, right? Because that was 3 or 4 years ago when I made a large, and now it's doing really well. I have a small amount of, it was a small amount of Bitcoin, but that's gone up. Not proud of it because nobody controls that. But the majority outside of that are in the industries that some of the ones that I've mentioned. You have in energy, real estate, in specific types of real estate that I don't believe, not quite honestly apartment buildings, but some industrial, which is the highest occupancy across the sectors right now. Some strip centers, retail strip centers, which have seen really good buys, and private credit in real estate, which is really a first position, less than 60% loan to value type, really low risk play. Yep. And then legal, where the legal industry has found itself really high risk adjusted returns, meaning you get great returns for a much lower risk and a similar kind of lending to attorneys environment. So those, and I'm working hard right now to make allocations in the medical industry, because what does that mean? That means I'm living with the times, and I know there's a lot of really smart people out there that think they can tell the future. Well, I couldn't. In 2009 and 10, when I lost my ass, nobody was telling me the market was going to fall apart. Maybe a couple of people knew, but not me. I'm not pretending like I'm that guy now. And I think that the economists either know they don't know, or don't know that they don't know they don't know. So I feel like the best time to be diversified is like 2 years ago. The second best time is today. And right now I'm working to fortify and build a portfolio of investments that are more in alignment with what I think will outlive regardless of another market downturn.
I love that strategy. That's awesome. That's awesome. Patrick, people, like, they're listening to this, they're like, I want to know more about Patrick. I want to find Patrick online. Where do they go to do this with you?
So passiveinvestingmastery.com is our website, passiveinvestingmastery.com. And on that site, we have a registration for our alternative investing mastery series. I highly recommend you jump in there, because every week or two, we bring on panelists of completely different strategies outside the stock market. It's like my blue ocean approach with, man, what was the education I wish I had available to me when I was an engineer busting my ass looking for where to invest. It wasn't all in one something. But what are all the 50 different kinds of vaults that you can immediately invest in? We also have our investments at the top. We have private credit investments, low risk cash flow plays. We have strategic investments in commercial real estate, which are actually favorable markets and favorable asset classes that are performing well at this time, and very opportunistic. And then we have legal funding right now. We have some others to come soon. We also have investments as well. And regardless of where you're at in your journey, I'm happy to talk to you. You know, I was able to get out of the slog of high tech, and I was able to get into full-time investments. And everybody's got a different story. Everybody's got different goals. Everybody's got a different portfolio. And wherever you're at in your journey, I'm happy to chat. And if we're not the right stop for you, man, we've got a huge catalog of different people we can point you at through our series. And I'm sure we'll get you pointed in the right direction. There's a link right on our homepage that would allow you to book a time on our calendar.
Awesome. Well, Patrick, a lot to think about from that one. Thank you so much for coming on the show. I think that everyone listening is going to be doing the same. Like, do I have is what I'm investing in secure if should something happen?
That was a nice video. Bye.